Good morning, everyone, and thank you very much for joining me. Today is Monday, and it's the 8th of November. It's the DAX Open with myself, Russell Shaw. I'm the Senior Market Specialist at FXCM, and please take note of my email address, rshaw@fxcm.com. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. Good morning, Zanesh. Nice to have you on the webinar. Thank you very much for joining. Market commentaries disclaimer. I'll just keep this on screen for a few moments. And just by references, market scope 2.0. All right, let's bring up the chart as our weekly DAX. This is where we'll start. Let's just go through some of the news headlines that we need to know about today. So European stocks expect to open flatline, and that's lacking clear direction at the start of the week. There was a mixed trading session in the Asia-Pacific region overnight, where investors were reacting to China's trade data released over the weekend. Official data released showed China exports surging 27.1% in October compared to a year ago. That was higher than the 24.5% growth forecasts that were forecast by Reuters. Meanwhile, US stock futures idled in overnight trading after major US market indices reached record highs on Friday, following a better than expected jobs report. US payrolls added 531,000 jobs last month. This week, investors are looking ahead to fresh inflation readings in the US. The producer price index and consumer price index are slated for release on Tuesday and Wednesday, respectively. Economists expect both inflation numbers to run hot for October. There are no major data releases on Monday. Earnings for Henkel and Covestro will put you out. All right, so what we have here is let's just kind of zoom in to this area here. And yeah, all right, so the high here is 1603.310. The higher 1608.8, so slightly higher than this candle, giving the DAX a close at an all-time high for last week. So a strong week. Now, the way that we were looking at it, just to remind everyone, is that we were looking at the pivot here. So here was the reference candle that was 4 or 5 weeks back, and then we have had a swing up, which is good to see. And the 30-week exponential moving average is moving in that northeasterly direction. And you can see that the stochastic is also making its way through to the 80 area. So the idea here is as long as we stay above 80, there's going to be an underlying bullish momentum. We're not overbought on the RSI. Now, just the fact that we've got this new all-time high here, let's just talk about that, because in my opinion, it does introduce some sort of complexity, and I'll show you why. We'll put in a 1.1, we'll put in a 2, and we'll put in a 3. Okay, so we've got 3 points here, and the 3 points, we've got a high, let's call it a peak. We've got a peak, a trough, and now we've got the higher peak, 3 points. But the definition is, for an uptrend, is 4 points. Okay, which to me is important because it means that we don't quite have the uptrend yet. What we can say for absolute certain is that we're not trending down. That we can say for certain. Okay, but we can't say we've got an uptrend for certain yet. And the reason for that is we need 4 points. 1, 2. Okay, let me just label these so we can see. We've got point 1, 2. And what we've got here is point 3, point 4. Okay. But if you take a look at what we've got, we don't have this leg here. We actually don't have this. We don't have this leg here. That's what's missing. Okay, all we've got is 1, 2, 3 points. So the fact that we're missing this leg here is important because it should have the first point for the definition, a higher trough followed by a higher peak. So there's no doubt that we're not moving down, but some sort of pullback at some stage and resumption, that would put in the uptrend, because then we've got the 4 points. Here we've just 1, 2, 3, something like this would be, in my opinion, bullish. So this kind of pullback, I'm not sure when it's going to come because there's clearly a strong sentiment following last week. It's going to be interesting to see what the media reports are when we get this pullback, wherever it may be. Maybe it's a bit higher, and maybe we get it over here. But the point is, it's needed in terms of the definition of uptrend. So just keep that in mind. The next pullback is something that could potentially be exploitable. Okay, the next pullback should be, in my opinion, we should examine it to see if we can find a dip in the uptrend, because if we're going to have a significant movement after this consolidation breakout, well, we're still right at the beginning. So the pullbacks here, to me, are very interesting. Now let's go through to our daily chart. Okay, daily chart also unfolding in terms of our analysis. In other words, the market's cooperating with the analysis. So we, in some sense, luckier because the market doesn't always cooperate with the analysis. So we've got this zone 1 move taking place. We've got the stochastic in a very bullish position, and we're not overbought here yet. Okay, you can see the expansion of the Bollingers. We can take these out now because the bottom Bollinger is playing that catch up that we spoke about. And then if we go down to our hourly chart, let's see if there is some sort of way we can exploit what seems to be a bullish sentiment, notwithstanding that there must be some sort of weekly pullback at some stage. And when that begins, we don't know. Okay, we don't know. But if there's going to be an uptrend, well, an uptrend has a definition, and that means we must get some sort of dip. All right, so we've got a fairly obvious market rhythm here. If we kind of move that there, okay, and now we've got this pullback here. We've come through to the S1 level. So this S1 level is our level that we're going to be watching this morning, and we want to see if it's going to hold as a support level. So certainly does have some overlap with price. In other words, you've got resistance over here, okay? You've got support over here, you've got support over here. The question is, do we have support over here? So there is some sort of indication of support, but this is obviously the big one. Is the S1 going to hold price? In other words, is it going to be defended by the bulls? And if it doesn't, then we'll keep an eye on S2. But what we want here is the triggers. We want the EMA trigger to turn bullish. That means the green on top of the orange. Let's zoom in here. Green on top of orange, trigger 1. We want the stochastic to cross over as well, bullish. So those are the two triggers. And then we really need stochastic to move towards 80 and hold that level. I emphasize this all the time because it really is the key in increasing the probability of a successful trade. The triggers are needed, okay, but it's really the stochastic making its way through the 80 and holding that is driving the probability here. So we want to just keep an eye on the triggers, and then we want to make sure that we get the cooperation from the stochastic. At the moment, if you just take a look at the RSI, it's bouncing around 50. So clearly some sort of consolidation going on, hence the flat open report. Nevertheless, let's just see if the market operates. And if we get that crossover, look for the angle and separation in the EMAs and the movement of the stochastic. Okay, if there is any questions, please go ahead and type those through. Any questions? Please go ahead and type those through. All right, nothing coming through. So let's conclude here. And thank you very much for joining another DAX Open tomorrow morning. Thanks very much, guys.